G'day traders, John from Crypto Candlestick Trading. Just doing an update on Bitcoin and the crypto markets, but I also wanted to have a look at dollar cost averaging, and I can see that there's big money starting to accumulate. So I just wanted to explain dollar cost averaging in the way that I've come to understand it over the last few cycles. Just having a quick look at Bitcoin here, nothing really has changed. We're still up here in this kind of previous support becomes new resistance sort of area, and we are seeing reversal sort of material happen here. We do have a low, a higher low, and a higher high. And with the relative strength index, we've got a high, a low, lower high, and we're heading down for a lower low now. So we do have divergence with the actual movement of the market and the relative strength index and the stochastics. So stochastics and relative strength index are both losing strength while the market seems to be still heading higher, but we are seeing sell signals in that higher movement. Okay, now just I'll keep it on the weekly chart, and I'll just go down and have a look at a few of these. So, the one thing that I've noticed is that when we go below all the major moving averages, and we start seeing buy signals, then I start to get very interested in those buy signals, and so especially when we see, like we can kind of see where it's come down, from these lows sort of here. As soon as we're above all the moving averages, like even above here, and like that's the sort of time that I'm very interested in getting into the markets. But before that happens, there's a thing called dollar cost averaging, and I just want to explain that and how it works. So while Bitcoin's, plodded along, gone along sideways, sort of down here, and then it's moved up a little bit. Now, if we have a look at the other ones, and I'm talking about the other ones that I'm talking about are the ones that are also on, say the top 50 in coin market cap. So this is the top. This will show you all the coins that are actually in the market. And I think there was, last time I checked, it was like 14,500. I haven't looked, for a while. I don't really care too much about how many there is. But here we can see that the number one is Bitcoin. Then we go all the way down. We just start going down probably. So the sort of ones that I'm interested in, I'm definitely interested in Ripple. Simply because of that court case. I think this is like the calm before the storm. I really think that Ripple could take off now that it's got that extra support behind it, knowing that it's won the court case. Cardano, I definitely like Cardano. Doge is kind of like a bit of a nothing coin, but everyone seems to like it. So I like Solana, Matic, Dot. So Avalanche I like. Link I do like, but not lots. So, like these ones that are in the top 50, they've actually, done a lot of work, and they've had to, show a lot of credibility in order to get to this stage here. So 88 Cardano, this one here, it's ranked number 7 in the coin market cap. So let's just go back and have a look, and we'll just see whereabouts ADA is. So this is ADA now. Now we can see, back in history too with Bitcoin, and the same with ADA. Like back here, it had a massive run, and then it's come all the way back down. And so, what we're actually, or what big money would be expecting from here. So, where I can actually see that big money started accumulating. This on the weekly chart too, by the way. So we can see back here that big money started to accumulate, and they didn't really want to be seen. But anyway, you can kind of see very clearly that they were there. And anyway, now we can see that down in these flat kind of areas down here, we can see the big money starting to accumulate again. Now this kind of gets me pretty interested in it. There's a thing called dollar cost averaging, and the way it really works is you average the cost of you getting into a position. So when it's down in these kind of lows here, big money will be buying, and they don't really care what the price is or really care where the price goes to. All they want to know is that they own some of this while it's down in these lows here, because here, we're looking on the right-hand side there, there's about 15 cents. When it's up around about, $3, they don't really care whether they got this for 15 cents, 30 cents, 10 cents, 25 cents. They don't really care where they bought it. And, just as long as they dollar cost averaged into these lows here, with the opportunity to sell it somewhere up here. So now we can see that big money's accumulating again down in these lows. And we can see that, like they're entering this position, but they don't want to be seen. So they're buying just enough to keep it under all the major moving averages while they accumulate their position. So we know that big money is interested in this one here. So because we can see with the accumulation. So this one here, I have no problem at all in dollar cost averaging into this one here, ADA. And if we have a look from previous, like it's gone here from around about 15 cents up to $3. But whereabouts could it go to from here? Like I'm actually hoping, if we have a look at this this candle here, the low of that candle there was 22 cents. So 22 cents, like now it's gone up 50%, in only probably 6 or 7 weeks. But I'm kind of hoping that we get another pop down to these kind of lows here around about 22 cents. If we do get a pop down to those lows there, I'll definitely be buying. And I want to start buying this one reasonably heavily. Now, when it comes to dollar cost averaging, when should you actually be doing the dollar cost averaging? And down in these lows is where we can see the big money accumulates, down in these lows. Where they don't do dollar cost averaging is when it's broken out. So as soon as it's broken out, the dollar cost averaging is over. They don't worry about that. Then from here on, they just start trading it from there. So, but the dollar cost averaging is a separate account that will stay there with the idea that, we're going to reach a 10 to 1 basis or something like that, say from here, like for this to reach the previous highs, or even, go a lot higher than that. If we, extend that back down to here and all the way up to there, this could easily go to, 15, $20. And so, but and there's some massive gains if it does that. And so down here in these lows, accumulating. So this is around about where we want to do it. When it's, for me, I like to do it when it's below all the major moving averages, and especially after it's had a massive decline. So people get very scared, to buy when it's had a massive decline and stuff like that. But if you're dollar cost averaging and just putting, say, a couple $100 a week into, or a couple $1,000 a week in, however much you want to put into it. When I first started dollar cost averaging in, I didn't really take it very seriously. I'd, kind of put $500 in, maybe $2,000 next time. And before you know it, I might have 20 grand in there, and I'd dollar cost average that. And then I'd see the results at the end of the day, and they were absolutely, fantastic. They were spectacular. So now I take it a little bit more seriously. So these ones here that I'm, that I've got here, ADA, Solana, Dot, VeChain, Avalanche, Near, Matic, Mana, Crypto.com, Ripple. So those kind of ones there, I expect that I should have around about $10,000 in each of those before they break out. And, like 10, if they go up 10 times or whatever, that's $1 million just from dollar cost averaging. And then I'll be trading out of these lows when we show, when it shows the signs to buy. But I'll be buying and selling from my trading, but I won't be buying and selling from my dollar cost averaging, because my dollar cost averaging, I'm expecting that this will go somewhere up to these highs here, or even way further. So I won't be selling any of my dollar cost averaging money until it reaches either previous highs or all-time highs. So that's when you do dollar cost averaging, when it's below these major moving averages here. When you don't do dollar cost averaging is pretty much when it first breaks out. Anywhere up to here, I wouldn't be dollar cost averaging up here at all, because at some stage it's going to have to come down. So if you're dollar cost averaging in up here, you're going to be underwater basically. But by not far, you'll be waiting for this market to come all the way back down and then retrace all the way back up to here, so you break even. So it's always best to dollar cost average when we're below major moving averages, after we've had a massive big run, a nice big decline. Right now, this is accumulation phase, and we can see here quite clearly that the accumulation is happening. So, what should we expect when we're looking at at these kind of moves here? And one thing that I often do is I'll always go back in history and have a look to see around about where we came from. From these lows here, like that's $12. I'll just shrink that up a little bit there. So that's $12, and then it went up to where did it go to? Around about $60, and then it came back down again, down to $20, and then up to around about $260. So we can see from there that like this is a very strong mover too. Like it didn't take very long at all for Solana to go up there, but now we're down in these lows again. I'm hoping that we'll actually have another decline, some sort of a significant collapse here, because it had a fair bit of a sell-off up there too, which is good. But now, we're not below all the major moving averages. Actually, to be honest, this seems to be showing strength. We seem to be pushing above the 50. So if we get another candle on the next week, starting Monday, tomorrow, and then we head up, then that's going to be like a reasonably positive sign for this. But one thing that I can see about this that I don't really like about it is that we've got a great reversal here. There's no doubt about that. And then we've got like 4 green days, and we've got an increasing volume on that, which is good. But we're sold off around about 30 to 40% on this candle here, which is not good. So usually this almost calls for exuberance, this here, and especially if we have, like just a one small candle pullback and then we take off again. That's like too much power at the one go. I mean, like it can work, but the chance of failure are a lot stronger than it actually working. So, okay, moving on. So let's have a look at dot. So here we can see with dot. I mean, like that's gone up a long way. That's well over $50, and now we're down to $5.40. So in this kind of scenario here, we're back here, and this is being accumulated again. We can see here. I'll just take that back a little bit so we can see a little bit more of the volume there. And here we can see accumulation with the volume here. And so this big money that's accumulating this down here, they actually don't want to be seen. They don't want to be found to be accumulating because they want this to be suppressed and staying below all the major moving averages for another 3 months, 6 months, or whatever they can, so that they can do more of this accumulating without being sprung. Because as soon as we break out, the accumulation's finished. Everyone knows it, and then that's usually when everyone jumps on board. So we want to make sure that we get both times. We want to be accumulating in these lows down here, and we want to be getting the breakout when it happens. Onto VeChain. I've also said another thing that inflation is 7%, and I've always thought to myself that in these kind of times here, if we're buying down in these lows here, not worrying about whether it's going to go up or down from here, we're just kind of buying, and even if we were to start dollar cost averaging back here, like that would have been mid. That's about 13, 14 months ago now. So, that's just over a year ago. If you were to start a dollar cost averaging back then, you'd still be at these same prices back, that we are today, and you'd still just be accumulating your position. So when you're accumulating your position, you don't count the dollars. You actually count how many cryptos you've got. So if you've got VeChain and, you started accumulating back here at this price, then all you want to do is accumulate more and more and more VeChain. It's not how much you actually got it for, because this is dollar cost averaging. It doesn't matter how much you bought it for when you're selling it up around about these prices up here. And that's almost 2 cents, and then all up here it's almost was 26 cents. So what's that? 13 times your money if it gets from here up to those highs again. But I also think, and I've seen this happen over and over again with these. When we come out of these lows here, when we see these highs here, these don't usually just get an equal match and then it declines again. Usually these previous highs are just demolished, and then it'll go up another 4 times or 8 times or whatever this previous high was before it comes down. I've seen that happen a lot. There's so much hype that comes into these markets, but you need to be ready to be selling up the top here when we see exuberance and stuff like that. So. Here on Avalanche, we can see here we've gone up, nice big run there. I bought this at $5 back at some stage, so that must have been around here. But anyway, went up to there, and I sold it somewhere up near the top here. I didn't even get the second run, which was unfortunate. Or I think I had a tiny bit, but it was only it definitely wasn't life-changing gains, that's for sure. But anyway, back down here we are in the lows, and so here we're below all these major moving averages here, and we're $13. So $13, and it's gone all the way up to 146. So what's that? That's about 10, 11 times your money if you're to be buying here. So dollar cost averaging in here. So if we're looking up there, that's $22, almost $23, and then we're looking down the low here, $10. So this big money that's buying here, they don't care if they bought it at $10 or if they bought it at $22. Anywhere in between that is fine. And if they have to do it for 6 months, 12 months, 18 months, all the better, because that means they can accumulate more in this lower position here without being sprung before the breakout, and then they'll be buying the breakout too. All right, that's Avalanche. So let's have a look at NEAR. So NEAR is another one that I'm dollar cost averaging into. So and I'd like to have at least $10,000 worth of NEAR as well before we take off. And this is the same again. We're looking up here at $20, and we're now at $1.44. I really hope that this one comes down. But have a look at the accumulation that's happened in here with NEAR. Especially down in these low areas here, we can see good, strong accumulation that's happening in here. And so, if big money's accumulating, we should start accumulating too. And whether you put, $10 each in these or $1,000 each in these, it doesn't really matter. What matters is you get something in these ones. You just want to own some of this coin before it reaches back up to here again. Whatever's comfortable for you. It's all very risky being in the crypto game, but still at the end of the day, if we play it correctly, we come out with some fantastic gains at the end of it. We just need to be patient before that happens. This one here, Matic, I mean, like, this has held its gains really, really well. I mean, like, that high there was $3, and then we came back down, and it went down to 40 cents. And then it's been $1.50 since then. We're below all the major moving averages now. We're at 75 cents, but 75 cents up to $3. Like I could expect that Matic would smash past this high here and like just leave this in the dust. This would just be a blip in the road by the end of it. Once we get up to here and break these highs here, that'll be another buy there and up for the run on that one. So Matic, yeah, I'm definitely going to be dollar cost averaging into this one here. Have a look at the accumulation that's happened down here as well. So Mana, I'm going to be accumulating this one here. I have been, I've still got some from the previous run actually. But we can have a look here. It's gone up to almost $6 now. We're now at 40 cents. So that's another one there that I'd like to be accumulating for sure. Yeah, I think I've only got about 3,000 of these or something, 3,500 or something. So it's not many, but I mean, like there's some there that I've got from previous run or something. So anyway, we can see the pattern that's happened here, and it's come down to here. Now we're below all the major moving averages. This to me, like it's almost looking like it's set in. So this could be like months or something. Oh, to give us some sort of a time frame is when we could be coming out of this. Usually the crypto market has a nice big strong bull run after the halving. Now the halving, I believe it's in March next year. So that gives us around about 9 months. If this works out correctly, it gives us around about 9 months of a little bit of advancing and then declining and stuff like that. It's more sideways, choppy sort of action. But we can be accumulating positions and even trading tradable rallies, between now and that 9 month completion time. And then if all of a sudden we've reached our lows in 9 months' time by March next year and we turn around and start heading up, that's definitely when I'll be looking for breakouts and stuff like that. But it could happen before that. We just need to be reading the charts. But that's one thing that has happened in history a lot is that when we have the halving, we usually have a nice big strong run after the halving. So that's around about March next year. Okay, moving on. So, we're still below all the major moving averages here. So this is accumulation time. CRO, crypto.com. Now, I watch a bit of UFC, so, I see crypto.com advertised on there all the time. And I also see VeChain, which is on there all the time as well. Where's VeChain? I'm definitely having VeChain in there as well. So I thought I had VeChain here. No. All right. So, anyway, I definitely, VeChain is one of, here we go. Sorry, I do have it. There it is there. Here we are, crypto.com. So we've gone up and then we've come down massively, like massively. Like that was almost $1. Now it's 6 cents. Like that's almost 20 times your money. That's really, really good. If this goes back up to all-time highs again, that's some very, very good gains there if you were to grab that. But me dollar cost averaging into here. So so let's just say that I do get $10,000 in here before it actually takes off and breaks out up up to these kind of levels here. Then that's 160 plus $1,000, just for that, oh, actually it'll be more than that. It'll be more than that. So we got, $10,000 worth of 6 cents, and then it goes all the way up to $1. So it's looking pretty good. I like that. Numbers. Ripple. I think Ripple has a lot. So here, even though it's gone up and then it's sold off a fair bit, we've got a doji here, which so still holding its gains quite well. I still think that Ripple is going to go very well, but is it going to pull back before it goes up? We can kind of see here previously what it's done. If it breaks up and has a bit of a sell-off, even up here, it's gone up and sold off around about 40%, around about what it's done over here. Then we usually have a nice big decline after it, but it did actually take off and go really well. I do believe that there is a new price level for Ripple. It's just not there yet. And I don't think 74 cents is it. I think it's up, it's up higher. Anyway, traders, I'm 19 minutes in, so that's around about, that's probably about it for the dollar cost averaging. So we can see where big money's, buying into these kind of lows down here. So it's better to accumulate with big money while they're doing it. And, but keep in mind, traders, like this isn't financial advice. This is just what I'm doing. And all I'm doing is following big money. So, if it works, it works. So far, if you want to have a look at, what's the likelihood of this working, just go back in history and have a look. And, choose Bitcoin or, Ethereum or something that's been established and around for a long time. And then after it's had a massive run and then a massive decline, we're under more than moving averages. See if you can find that accumulation so that you could have accumulated as well. And then see what the result was after that, as to where it went to next. Anyway, traders, I'd probably just be looking at Bitcoin, for that, if you wanted to go through and back test Bitcoin kind of have a look to see where it, you know, when it was below the major moving averages, when you could have been accumulating, and you know, what was the result after it actually went above. So, but you know, there's another thing that you need to keep in mind as well, is that even after we do break above, you know, if we see sell signals like this one here, you know, we need to be prepared for what they're telling us, and or actually prepare for what they're telling us, because just in case it happens like this here, you know, like that was a sell signal there, came all the way back down, but all of a sudden there was massive buying that came back in here as well. Then look at the result that, you know, happened after that. But anyway, accumulation under these major moving averages is what I'm doing at the moment, and what I'll be doing that until I get the breakout. And then when I get the breakout, like a real breakout, where all the other cryptos are following Bitcoin, then I'll be all over that too. All right, traders, I hope you have a good week. I hope you've had a good weekend. If you have any questions with your charts, please let me know. Talk to you again soon. See ya.